Welcome to the January 15th, 2024 advance report from McGowanGroup clients and networthradio.com listeners. Bitcoin, a cryptocurrency propeller head frenzy this week, and I'm going to cover all the details. But you have to go back to Monday. On Monday, the SEC tweeted that they were going to approve, finally, the 11 exchange-traded funds that would go out and buy Bitcoin. Then, the next day, they said, no, our X account was hacked. And it gets more humorous. So, they were still anticipating that this long anticipated, it's been about a year of anticipation that the exchange-traded funds would get approved. Now, this is not part of our model portfolios, and it won't be, but I'm going to give you the inside trading and money flows that happened this week. On Thursday, the SEC tweeted, but they probably started the tweet with, no, this is really us, not that hacker from Monday. And they actually said, okay, the exchange-traded funds are ready to trade. It surprised me. They were instantaneously ready. I'm going to show you BlackRock's exchange-traded fund, not a recommendation for your portfolio, but I want to cover some of the potential outcomes here. So, this was the 5-year history of Bitcoin right here, and you quickly go from 10,000 to near 70,000. And everybody was piling into crypto. This was the wave of the future. And then, this was really interesting because when you see 2020, by the way, when you needed the money the most, Bitcoin was $3,800. And it had descended pretty rapidly, from about the 20,000 level. So it didn't help you in the COVID panic. Anyway, then it goes from 70,000 down to about 15,000. That implosion. Now, what's happened right here? This is anticipation of the exchange-traded funds, which have now arrived. So, let's say that you went and bought one of those. This one is the BlackRock, okay? BlackRock comes out at a very puzzling price of $28.53. But Bitcoin at the time was about 47,000. So I'm not sure what the ratio is, but anyway, Bitcoin goes to 49,000. All the money piling in, it's finally here. And there's millions of people that'll now buy it because it's easy to buy on an exchange. This happened with gold, and I'm going to show you what happened there. Now, I'm not saying to do this, and I'm not saying it's a bad thing to do. What I'm doing is giving you the money flows. So, all the cryptocurrency people said, oh, this is great. There's going to be a lot more money coming in, and it's 49,000. And Kathy Wood runs a big tech fund, and it's smaller now, but she actually said Bitcoin could go as high as $1.5 million per coin. That's a bold forecast. Anyway, it didn't happen this week. the ETFs, most people who bought the ETFs at inception have lost about 9% so far. So we'll keep you posted on the money flows. And other digital Beanie Babies too, because there's supposed to be a bunch of ETFs for Ethereum and other things that are in the works. Now, it doesn't pay a dividend, and you only have a supply-demand function to determine price. That's not an equation that we use in our portfolios. We like to get paid real cash flow. We like companies that make money. We like global high yield because you get paid real cash, and when we can get discounts in those categories, including medical dividends, we prefer that. And that's just a preference. Real assets that are liquid, that pay real cash flow, instead of getting into a speculative frenzy, which is actually sometimes dangerous because it's only supply-demand, and if everybody's in a panic, then there's not much demand at all. Here, this is when the gold ETF came out, GLD, and it's good to study. We go back here to 2005, all right? 2004 is when it came out. Gold is about $400 an ounce. The pricing on this one is not as puzzling as what BlackRock did with the Bitcoin, but anyway, $410. By the way, I'm Spencer McGowan, President, McGowanGroup Wealth Management, your financial weatherman with your weekly fast-paced tour of the global financial markets. Be sure to like it and also to subscribe. If you like it, then hit the button and subscribe, and you'll get updates especially when there's big news like this week. Anyway, for about 400 an ounce it comes out, and boom, goes all the way to $1,900 per troy ounce. And it didn't see that price again for nearly a decade. Now, there's no dividend. You descended from 1,900 to near 100, or to near 1,100 on the price of gold, and here that was about 110. Why is that relevant? Well, you lost nearly half the money. It took you 10 years to get back to even after that frenzy. It could be that everybody that was going to buy crypto because of the exchange traded funds had already bought it, and maybe that's why those ETFs are down 10%. I just have bigger fish to fry in stuff that I believe will make more money longer term, more reliably. So gold did produce a 5-fold gain in gold when the ETF came out because lots of people bought it. That's the premise. So far, it's not correct, and it actually didn't go up for about a year. So we'll keep you posted on this one. Here's the Dow Jones Industrial Average. We're basically a minus 0.5% for the year to date. I wanted to cover, we covered CryptoMania. AI Mania is next. Now we're going to do a special report on artificial intelligence, what it means, who makes money, but it's huge increases in productivity. And the premise on AI is another super cycle. Like when everybody got PCs in the 90s, had tremendous increases in productivity and profits, and people are declaring that this is an AI super cycle. Doesn't necessarily mean all the companies involved will make money, but increases in productivity and efficiency are what we're looking for there. The other mania is the diet drugs. The diabetes, fat-reducing drugs were one of the big money flows last year. You could see Eli Lilly just boom. That's when they announced Mounjaro. And it's a huge multiple, very expensive, but it is notable all the money flow in, and so we're calling that the diet drug mania. Novo Nordisk was first with Ozempic, and you can see, boom, this spike right here in the summertime and generally continuing in an uptrend, both stocks near all-time highs at the current time. Inflation came out this week, right? And the first part of this report, and the Dow descended to about a minus 0.5%, and part of it was this news. This is producer prices, which tells the opposite story from what we were hearing on the CPI reports. Producer prices, that's inflation for companies. With all the wage growth being about 5.5%, this is surprising. And a lot of this is productivity, right? Also, it's good for corporate profits. Now, this has been coming in as deflation for producers, and if you take the trailing 12 months, it's only 1%. That's about half of the Fed's target. So that's not driving inflation, even though you have wage push inflation. Here, this was the report that the markets didn't like, 0.3% for the month. 3.6% would annualize, that's what that number annualized, be about 3.6 or 3 3/4. The trailing 12 months is 3.4%. Why is that number relevant? For the last 110 years, inflation has averaged about 3.3%. So you're back to what has been normal inflation for the last 110 years. Will it go to the Fed's 2%? And when will they cut rates? If they cut rates this year, then you're likely to see a rally in high cash flow assets. So you want to be prepared. Go to networthradio.com, contact us there, and you can come down to the Crescent. We serve affluent families right here from the Crescent in Dallas, or you could set your time for a Zoom call and we'll update your plan for this part of the Fed cycle, which is drastically different from 2022. Thank you for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast, Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.